Okay, let's talk about Fibonacci analysis. The first thing I want to point out when dealing with the Fibonacci tool is that I always use it in combination with price action. So I don't use it as a standalone tool or means to identify key levels. Instead, I use it to confirm the key levels and also find ones that I may have missed during my initial analysis. All right, so I've got the Euro USD daily time frame here. And I'm just going to go through and identify the horizontal levels that I think are important. And then I'll go back through and show you how I use the Fibonacci tool. All right, so you can probably tell I did that pretty quickly, but I have most of the major swing highs and lows covered. And let me just go ahead and draw this out for you before we get into the Fibonacci tool. All right, so I've got these highs up here, which being multi-month and even in this case multi-year highs will certainly be important if retested again. I've got these two highs back here. I've got these highs and then a little low right here. And then I've got this swing high and this swing low. Now, this area through here, okay, a lot of people may put their level down here, and that wouldn't be wrong because you can see that we also have not only this swing low right here, but we also have these highs. Now, that is not incorrect, and in fact, I'd probably keep this level on my chart, but I also really like this area through here because notice how we have these highs, this low right here, swing low, and then this high. So even though the market had broken below this level and then closed back above it, I still really like this this little pivot right here, and it will certainly be important if the market comes back down to retest it. All right, so here's where the magic happens with the Fibonacci tool. So if I zoom out, what I like to do is I like to use the Fibonacci tool on major swing lows and highs. So one general rule is that the longer the market trends higher or lower, the more important the Fibonacci levels will be. So in other words, if I were to draw my fibs from here to here, those levels won't be quite as important as the Fibonacci levels from this low to this high. Okay, so the further you go back, the more important these levels are going to be. That's just kind of a general rule when using the Fibonacci tool. All right, so in fact, I'm going to use this swing low back here, and I'm going to use this swing high up here. All right, so what I like to do is I'll come in here and confirm the levels I've drawn. Now you can see that this 23.6% Fibonacci level here is very close to this level I drew up here. Okay, so that's a pretty good sign. It's not spot on, but it's pretty close. The next level we'll take a look at is the 38.2% Fibonacci. So we have that level right here, and we can see that this pivot that I drew back here, that's probably only about 15 pips or so between the two. So again, it's not spot on, but it does tell you that this area through here, if the market comes back down and retests this area, it's going to be significant. All right, now another thing I like to do is move out to the weekly time frame, because sometimes the weekly is going to show you something that you simply can't see on the daily. All right, so let's look at this 50%, which is not technically a Fibonacci sequence. However, it is a level that the market loves to retest. So we have this 50% right here, And what I'll do is just draw the level on the chart as just a temporary level to see if there is something that's significant here. And if we scroll back, you can see right away how on the weekly chart, this 50% from this low to the high back here is extremely significant. So we have all these highs back here. All right, so that's just looking at this chart. That's about a year's worth of swing highs at this area. All right, so that is also a level that I would want to keep on my chart. So again, it's pretty rough right now, but I would go ahead and fill in the rest of these levels on my chart. And what you can do too is come in here and draw from this low to this high and double check your levels. So right away, I can see this area right here would also be one that I'd want to have on my chart, because let me just delete this. So right through here, we can see how the market made this swing high and this swing low. Okay, so I use the Fibonacci tool as a way to confirm the levels I've drawn, but also find ones that I may have missed. And one last thing I want to point out before we go is when you're using the Fibonacci tool, you always want to drag from left to right. So it doesn't matter if you're going from a swing low to a swing high or from a swing high to a swing low, you always want to drag left to right. So it would be from this low to this high, or from this high to this low. But notice how I'm always dragging it from the left side to the right side. All right, so I hope that helped. Just remember, use the Fibonacci tool sparingly. Don't use it as a standalone tool. It can be helpful for confirming levels that you have on your chart already, and also possibly identifying some ones that you may have missed. If you enjoyed this video, be sure to hit that subscribe button to get notified whenever I post new videos. Also, give it a thumbs up so I can help as many traders as possible, and don't forget to leave your comment below.